All right, folks. Welcome back to another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And today was a good session because I knew that it was a shit session. So I did nothing and I walked away by 10 o'clock, which is good. I saw my setup in the market, but I wasn't willing to take it because the conditions were just not ideal. And given that economic calendar, I don't want to put on unnecessary risk. I really want to wait till maybe even this week transpires and look for better setups in the following week. Probably won't be doing much the rest of this week. I already took an unnecessary loss yesterday. So going into today, I was being a bit more selective, a bit more cautious because yesterday's session taught me a lot about setup selection and day selection. Because the loss that I took yesterday was completely unnecessary because of the condition that I faced. This trade right here, just pull this up real quick. You can see the market is what? Literally sideways, and I'm in there trying to trade it. I wasn't going to make that same mistake today. So although I saw my setup present with the parameters of my playbook present, I wasn't willing to take it. So today I practiced the lesson that I learned yesterday, which is typically how it goes. If you notice in your journey, you might learn a lesson and then be able to apply it literally the following session. I think that's always a good feeling. So let's go into my pre-market game plan and how I got the bias completely wrong today, which was another key insight from today's session. So overall, not a terrible session because I didn't put any risk on. There's no damage done. I didn't take a winning trade, but I walk away with my equity protected. And that's the most important thing. Capital preservation, risk management. So basically the entire issue with my pre-market plan today was I knew what the market was drawing for pre-market, but I didn't create my plan around that. I knew the market was drawing for the new week opening gap here because price was clearly on the sell side of the curve pre-market. So I state that, but I state that I want to see it deliver the new week opening gap and then look to be a buyer. But why not just create a plan around looking for the new week gap opening gap to deliver? So what I anticipated the price to do in my pre-market plan, because I saw it was on the sell side of the curve, delivered perfectly. Why not trade that? That's my problem with my approach today. So I created a plan looking for the new week opening gap to deliver, then see if price can reverse instead of creating a plan to see the new week opening gap deliver. So why didn't I just do that, So I'm still dialing in my pre-market approach. And I've learned that this is easily like the most important thing, most important aspect of your trading, because you got to confidently know what the market is reaching for before it does it. So coming into today, we can see that the weekly candle had no lower wick on that. Candles usually don't stay like that, right? I mean, if you just look at every single wick or every single candle that we have here, they pretty much, for the most part, all have upper and lower wicks, except these where the market got pretty weird back here. And this is just also the front month contract, so all of these are basically days that just lacked volume and volatility. But for the most part, I think 95% of the time, the weekly candle is going to form a wick. So at this point, it doesn't have the wick, and I'm noting that. So I'm saying I'm still looking for it to form a wick at some point. This is the candle that's going to form the buy side imbalance, sell side efficiency. So based on this week's economic calendar, right, we have non-farm employment change. We had a lot of high impact drivers today. Last week's candle was a large up close candle. I'm expecting this candle to probably not completely overlap this and probably not be another large up close candle. It's probably going to be a small basing candle like this that forms the buy side imbalance, sell side efficiency. So going into today, I'm looking for more of like a consolidation. I'm not anticipating a large down day because of the weekly chart and the economic calendar. That makes me think this week is probably going to be more of a consolidation, not really a directional type of week. So here's that lower wick. There is no lower wick on Monday's range, right? I'm still looking for that to deliver at some point in time because that's a new week opening gap that's left inefficient. That's a strong draw on liquidity. High likelihood that the market is going to go there. So going into the chart, let's go to the 4 hour. That's where I left off. So going into the open today, first of all, my bias is leaning bullish. I'm not expecting a large down move like this, right? I'm not expecting continuation. Today we got a down move. We don't see continuation in it. We see these large lower wicks. So this is going to be that more of that consolidation that I'm kind of expecting. Like tomorrow we could probably push up back for these equal highs right here just because of the economic calendar and what the last weekly candle did. This candle dropped lower, took that low, closed above it. That's what I wanted to see to confirm my bullish bias. And I wanted to see price respect this gap and this down candle. Now the market can do this and then do that on the following candle, because that just means it dropped lower and then started to rebalance this range within that candlestick, which allows the following to open and then drop down immediately. And then on the hourly, this is my annotations in hindsight doing a market review. I'm just going to delete that. On the hourly, I was kind of looking for the same thing, because this 8 o'clock candle took these lows and closed back inside the range. Now, usually for me, that would be a sign of strength. And I'm looking to buy the market on a drop below the 8 o'clock candle. That's what I was primarily looking for going into the open, because of the discount opening range gap that we had. So the market opened, gap down, lower opening. What I wanted to see was the market open and trade down, take that low, deliver the new week opening gap, and then work higher for this buy side liquidity here. Now, that didn't really make sense, because if I know that the market is drawing for the new week opening gap, why don't I just sell the market short, aiming for the new week opening gap? That would make more sense, right? So if I go back to today's daily recap, I can literally see on the 15-minute time frame in my pre-market plan. See, I'd like to see it move away from the discount opening range gap, deliver new week opening gap, then reverse for something that I can buy, right? So I know this tells me we're on the sell side of the curve. I know this is rebalancing the range. So I want to see the market rebalance this range, reject it, and then deliver that, and then look for something to buy it. But what I'm trying to get at is, why not just look to sell the market as it's rebalancing this range and target that, instead of waiting for it to deliver that and then look to buy it. So going back to the 15-minute chart, we could see that's not what actually ended up happening. Market opened, it consolidated, kind of hung around a bit. It's pretty comfortable where it's at, sat right here, rebalanced this range, came just shy of taking that high, which is what my draw liquidity was going into 9:30. Cleared these relative equal highs right here on the 10 o'clock and 9:45 candle. Boom, poked above those. Failed to close that discount gap opening, and then boom, dropped for the new week opening gap. Took Friday's low as well. Right there, right? Is that Friday's low? Let me make sure. Yeah, it's Friday's low. So I actually did not think at all it was going to deliver this low. I was looking at the 4-hour time frame, and I was anticipating it to deliver this gap right here, the new week opening gap that you can see on the lower time frame, and then find support somewhere inside of that wick. Did not expect that kind of a move at all, but it made sense that this was going to happen because of this that I knew was influential as a draw on liquidity. I just didn't plan to trade the market in that direction, which is where I went wrong in my approach. And what actually happened was the market rejected the balanced price range from the overnight session. You can see there's a lot of overlap between these candles, so it's going to take a really strong move to get over that. And if there's not a really strong move, then the market's going to reject it and trade lower. And what's really the telltale sign that this thing is not going higher, going to go lower, is where the bodies close. You can see the 10 o'clock candle closes below the midpoint of that discount opening range gap. And the 10:15 candle opens below the midpoint of the opening range gap, trades up, takes buy side, and then trades down, closes much lower. So even if I did have the correct read on price, I would have missed this move anyway. Like, it happened way too fast. It didn't offer anything for me to sell short on. So I walked away by probably like 10:09, somewhere in here. I was like, this is not a good day for me to trade. I'm not going to stick around. I'm gone. Then the market trades up, and I'm thinking, okay, maybe my bullish bias is playing out now. It rejects the upper quadrant of that perfectly. Doesn't deliver to my draw, my bullish draw. I was looking for this level, and then it just falls over. You can see that it just goes. Like, there's literally no retracement to get on side of this. Maybe if you sold the bearish breaker right here, but that's not something that I ever do at all. So on the 1-minute time frame, I see we're on the sell side of the curve. I see that this is rebalancing the range, and I'm expecting all this to get ran out in one quick clean move, kind of like it did right here, because there's nothing solid in here for the market to grab onto, right? We have clean lows in here, clean lows in here. We have one gap. There isn't a lot of solid price action in here for the market to trade down into and then trade higher. So instead, at the open, the market just straight up consolidates. It's just dead. Before those 10 o'clock drivers were right here. Now, initially, I'm watching this consolidation range, looking to see what side of the range it takes first. I'm still bullish at this point in time. The market drops down, takes the sell side liquidity below here. It's very smooth. Boom, drops down, takes that, but then comes back inside the range. So I see this gap that forms right here as a potential buy in alignment with my pre-market plan, but I'm not taking it because of this condition right here and because it's ahead of all those high impact 10 o'clock drivers. So I see this gap as a potential long, but I'm thinking these conditions just aren't worth it. Like, I'm not willing to put risk on when the market is doing this before high impact drivers come out. It just doesn't make sense, which is pretty much the mistake that I made yesterday. So I took the lesson that I learned from yesterday, applied it to today, and I literally just sat on my hands and I did nothing. If we go to my intraday commentary, let's see. So I didn't take that gap because of the conditions, and then it started to move away, and then I was like, well, shit. I was kind of pissed off that I didn't take the trade. So after that, I knew that this is probably turning into a session where I hurt myself, and if I stick around. So at least I know my playbook works. The parameters for my playbook were there to be a buyer, although it's not what the market did. If I took this setup, it still would have offered 30 handles targeting the consequent encroachment, the opening range gap. I just wasn't willing to take it because of the shitty delivery. So not the ideal first 15 minutes. The first 15-minute close tells me the market is comfortable where it's at. Maybe not going to deliver the new week opening gap. I can see the market take sell side with smooth buy side above and come back inside the range, but these conditions make me want to miss this setup. If that's it, and be okay with that. I can see something in price right now that might be there, but I don't think it's worth putting risk behind. I'd be okay with missing it. So at 9:45, as the setup is developing, 9:45, I'm stating this, like, I can see it there. I'm not going to take it because of the condition. And then seeing it begin to play out, now I'm kind of pissed off that I saw the gap and I just didn't take it, and now I'm watching it play out. That usually leads to a situation where I know I end up just sticking around looking to fade the bias and the plan that I originally had in place, but because I missed that opportunity, all I do is stick around and look to fade the market. So at that point, I'm thinking, I should probably walk away. This is probably going to be a session where I end up hurting myself if I stick around, if the market just keeps trading higher and I miss that move and I wasn't a part of it. Well, all I'm going to do is stick around late in the morning session and look to sell it, look to fade that, look to fade the move that I should have been a part of, but I missed. And that usually leads to really shitty sessions for me. So I know at that point, if I continue to stick around here, it's probably going to turn into a session where I end up hurting myself. And then I'm just waiting for that 10 o'clock driver to come out. It comes out. And when it does this indecisive close like this, I know, like, yeah, this is not a good session at all. I don't want to be a part of this at all. So I say very shitty deliver at 10 o'clock. That tells me the rest of this AM session is not going to be anything worth trading. Time to cut bait and work on myself off the charts. All-time high conditions are kicking in. I like how the data left relative equal highs. See, and then I start to build trade ideas after saying that I know I should walk away. So that's how I knew, look, bro, you just told yourself that you should probably walk away, but now you're creating more trade ideas that you're looking to potentially play out. You're about to do something really stupid. So then 5 minutes later, I say, this is not a good day for me to trade, and I know that. So what happens when I know I shouldn't trade but stick around and try to make something out of the session? Does it ever end well? Never. Goodbye. I'm gone. So at this point in time, in 10 o'clock, I'm picking up my own patterns that I've recognized in myself that lead to all my shitty sessions, and I'm saying, look, bro, you can't stick around, because what happens when you do stick around after you know that you're going to hurt yourself? Nothing good, ever. So why would you stick around? Leave. And so one thing that's helped me really mature in my journey recently is having a really solid month last month. It wasn't really solid, a decent month. Having a decent month last month, just slightly unprofitable, profit factor of 1.82, slightly in profit, but I traded a lot less last month. So last month really kind of opened my eyes and gave me like a paradigm shift of what profitable trading actually looks like. Like, most of the time, you're not doing shit, and that's just the truth. So if this is not a good session, and I know it's a session where I'm likely to hurt myself, then I'm going to leave, and I'm going to come back on a day that's better. But I wouldn't be able to have that perspective and that level of understanding if I didn't have this month where, for the majority of the month, I was actually forced to not trade at all. So in of itself, me being forced not to trade was a blessing, because it kind of opened up my mind to, bro, this is what a profitable month of trading looks like. You actually really don't do anything at all. You have a couple good sessions. Like, bro, I took 4 good setups this entire month and I was profitable. So you might have like 4 or 5 good sessions out of the entire month that make that month profitable. And as long as you prevent yourself from trading in the sessions where you know you're going to hurt yourself, and manage your risk on the sessions where maybe you thought you had a good setup and executed on it and it was part of your plan, but it didn't play out, then that's profitability. So I'm really starting to grasp the idea of what profitable trading actually looks like. And it's just doing a lot less, knowing yourself really well, like knowing when you're going to hurt yourself and make stupid decisions, and knowing when you have a really good read on price and we should really press your edge because the market's so clean and so clear and easy to you. But that's only going to happen a couple times out of the entire month. So now I'm going into each session, approaching it with the mindset that I'm trying to have a good month. I'm not trying to have a good day. I'm not trying to have a good session. I'm not trying to I'm not playing it one trade at a time. I'm not focused on just this day. I'm thinking about how my entire month is going to play out. And that's just been a huge paradigm shift, because now I'm going into the market and I don't care if I do anything that day, because I know throughout the duration of the entire month, I'll probably have 4, 5, 6, maybe 7, if I have a really good month of good trading days, that will make up the profitable month. So going through a lot of good positive change right now, and it's pretty exciting. But I think that's going to be it for this one. So talk to you next time.